All right, party people, buckle up. I got one for you this evening. Happy Sunday evening to you. The quarantine vacation is over. It's time for us to get dialed in. Of course, I would be remiss if I didn't throw my disclaimer up there. Here's my lower third, beautiful production value there. That is my name, Derrick Evans. That is my phone number. That is my NMLS number because we'll be talking about mortgage rates today. I'm a VA home loan expert. I'm going to talk about forbearance, mortgage rates, what's the future look like. We're going to talk about stocks. I have proof of market manipulation in the stock market. In fact, the guy who manipulated the market, obviously, has actually been going on podcasts and bragging about it, and has a pretty interesting story. I'm going to tell you all about that, the things we need to be concerned about, the things we need to get dialed into, because now it's time. Our country needs us to get back in the game here. It's the quarantine vacation is over. We've all had fun. We've been home, a little bit more than normal. We've kind of been forced to hang out with each other, watch a bunch of Netflix, and just chill and order food and get fat and happy. And that's all great. There's nothing wrong with it. It's great. But we need to now get dialed into what's going on. We need to start paying attention to what's happening and make sure our business is in good shape and make sure our investments are in good shape and make sure that we know what's coming next and what's happening out there. All right. So I'm going to actually try to keep an eye on comments this time. I normally don't do this. So I don't know if this is even going to be possible, but I'm going to try to do it since I'm using a different program here. Okay, let's get dialed into it. Let's jump right in. So forbearance. You've been hearing a lot of people talk about this, the CARES Act, the mortgage forbearance. You've seen a lot of lenders probably, yelling, screaming at people, don't do forbearance, you complete nincompoops. If you did forbearance and you didn't need it, then you're just an asshole. Well, here's the thing. This is the truth. All right. The reason that you're going to see, particularly branch managers, be upset about this is that if someone does a new loan and they apply for forbearance and take forbearance prior to making their first payment, the branch manager, first of all, the loan officer has to give their commission back. It's the same as an EPO or an early payoff. Branch manager so the loan officer has to give their commission back if that happens. I think it's within the first 6 months. If the home sells, the loan pays off, whatever, or goes into forbearance, all considered to be the same. The loan officer has to give their commission back, so that's one reason. And then also the branch could get charged up to 7 points actually on the loans. If it's a $500,000 loan, they could get charged $35,000 by their bank because that's what Fannie Mae is charging their bank, and the blank rolls downhill. So if you wondered why people are so adamant about this, that's one reason. Now, there are a few things that we should pay attention to here. Like, so who is this intended for? A lot of people say, well, this is intended for people who really needed it. Not actually. There's no rules. You didn't have to do anything to qualify for it. So basically what the government was doing was saying, hey, we want to make sure that no one gets left out here, that someone doesn't slip through the cracks. And so we're not going to put any sort of parameters around this. We're just going to say, hey, let people get help with their mortgage if they need it. It was a very desperate move. It was a very stupid move. But that's what they did. So certain people went out and took advantage of it, maybe, who didn't need it and so forth. But that's trust me on this. When you do forbearance, you're not getting away with anything. You're not paying any less. You're not skipping out on anything. You're kicking the can down the road, basically. So there's nothing to be gained other than the only thing you can get with forbearance is that you can avoid missing a mortgage payment or having a mortgage late. But you have two huge assumptions there. The two huge assumptions are that you will be able to catch up within 4 months with all the payments that are due, that are accumulating and stacking up, and that because if you get to that point and then you're going to get the mortgage late. So it means within the next 90 days or however long you're getting your forbearance for, you're going to be able to catch up with all those payments. If you can't, then you're going to get the mortgage late anyway. You're also assuming that the creditor or the servicer is going to report it correctly. And I think that's the biggest risk, honestly, of the forbearance is that banks misreport stuff all the time. Do you know that the majority of credit reports, almost all of them, in fact, have inaccuracies reported on them? Almost every single one. There's very few credit reports that do not have inaccuracies. The creditors are notorious for incorrectly reporting stuff. And this is an opportunity for that to happen on a massive scale. And I've already seen it take place. I've already seen people who are in forbearance get reported as a mortgage late. Listen, if the right hand doesn't talk to the left at the bank, then that's going to happen. And it's going to happen a lot because these are big numbers. The banks are being incentivized somehow by the Fed to put people in forbearance. So 100%, that is the biggest risk. So who should use it? If you should use forbearance, if you are going to be late on your mortgage, more than 30 days late. If you're going to be late by more than 30 days on your mortgage, that's when forbearance can make sense to give you a lifeline. But if you're not going to catch up in the next 90 days with all the payments that are accumulating, then there's no point in doing it. Okay, so that's the deal. That's the reality behind what's going on with that. Right now is a time where we, as a group, what's up, Carrie? Guthrie, how are you doing? Thank you so much. Appreciate you saying that, dropping in. It's been a long time. Hope you're doing well. If we all need to have a little patience right here, okay? And I'm going to do a video this week about patience and persistent patience and a few things that I'm doing, taking this as a lesson not only to learn a little patience, but you know, we're seeing that even Amazon, which is the most dialed in logistical company in the world, in the history of the world, is having trouble right now dealing with demand and dealing with logistics given the COVID situation. So if Amazon is struggling, we need to be willing to give everyone grace. Everyone. And this is not just mortgage companies or real estate companies or whatever. We just have to realize like certain things are taking forever, like getting payoffs for people's loans or doing refinance. It's taking weeks and weeks and weeks. Everything, our understanding of this, you know, instant gratification world, we're going to have to reset ourselves a little bit. We're going to have to be prepared for a little bit different world post-COVID where things are going to take longer, and we're going to have to be able to show grace, and we're going to have to be able to show patience. This is going to be something that's really, really important. Okay, so let's dive into mortgage rates. And I actually am going a little bit off the reservation here. I don't know. I just realized I don't know if this is okay or not as soon as I started this live, but I'm showing pricing here. All right, so I quoted someone today on a purchase. And I know I normally show the mortgage bond graph, which has been very steady. The Fed has done a great job, but I want to show actual interest rate chart. This is something I send to every single one of my clients. So this is just giving you an idea of how interest rates work. This is someone who is looking at a purchase. I did not verify any information here. I just pulled credit and verified that he had 777 credit. I was like, man, that is the luckiest mid score I've ever seen. I've never seen a 777 before. There's a VA purchase, $489,000 loan amount the property he's looking at. And what I wanted to show you here was kind of just how this works, because you know, when you lock someone, you're not actually locking an interest rate technically, you're locking a pricing. Now this is Friday's pricing. So this is from Friday, this is expired, this doesn't exist anymore. Monday rates will be different, most likely. They change every day, sometimes multiple times a day. But this was just what I was able to show them based on what Friday looked like. So this is 777 credit, VA purchase, $489,000 loan amount. This man will qualify for a 2.75% interest rate, and this premium here, the cost for the rate, actually he would get a $748 lender credit from me. And what's interesting about this and to note about this is the opportunity that some people have to pay closing costs. So for example, he could take a 3.25%, which is still an incredible fixed rate, and there's no fees. Remember, we charge no fees, no lender fees, no junk fees, nothing. He could take a 3.25% and use $5,300 toward closing costs, which is nice for, you know, VA buyers a lot of times. So you have the opportunity now with rates being so low to sort of use some of these different, you know, opportunities. Now it doesn't make much sense to go higher from here because you see you're not getting very much. I mean, you have to go to 4.25% to get 8,600. That ain't worth it to go a full percent there. But this just kind of shows you the market will place you where it wants you, and 3.25% is the place to go if you want to get a credit. If you want the lowest possible rate, just go 2.75 in this situation. So this is a peel back behind the curtain look at, you know, what we're looking at with interest rates, and it gives us the opportunity to also look here and see the quick P&I calculation on this. Now most mortgage professionals who are familiar with this sort of pricing matrix. It shows you the price of the loan, the P&I, the cost, in this case which is negative, which is great, which means when it's negative, it means it goes to the borrower. So they would get this much money. Now, what you'd have to do to calculate this is you would have to, and by the way, this is going to be a long video. I'm going to go through a bunch of stuff in detail, just tons of information that people need to know about what's going on right now. So you'd have to look at this and go, okay, $5,374, we're going to get that toward closing costs. So what's the difference between these two payments? And we can see it's $132. So if you divide $132 into $5,374, that's the answer is over 40. So in the next 40 months, if you go this route right here, if you take this 3.25% to get the closing cost credit, you in the next 40 months you have got to refinance to a 2.75 or better in order for it to make long-term financial sense. So that is how the math breaks down in one of these situations. So I send these to my clients on purpose because I want them to see what I'm seeing. Because when I lock the rate, I'm not really locking the rate. I'm locking this sheet of paper is what I'm doing. I'm making this. our matrix that we get to play with, and we can move the rate around to whatever we want. But this sheet is locked in. So when you lock, you're not really locking a rate, you're locking in a rate sheet. So that's it. As far as mortgage rates are concerned, we should expect mortgage rates to stay low for quite some time, because this is something the Fed can absolutely manipulate, and they 100% are manipulating it. We should expect them to continue to manipulate it, so rates should stay right here. Now, but there's still wonkiness going on in the world of pricing. Where the bond prices are right now in the 2.5% coupon, interest rates should be much lower. But banks have taken heavy losses from some of the mistakes the Fed is making, blowing out their hedge, and some of the things that are going on with forbearance and the different costs that are associated with this. Some mortgage companies are losing money hand over fist right now when they should be making money hand over fist because of these errors. As a result, the actual retail rates have not gotten as low as they could. So if bond prices stay where they are right now, and banks are able to recoup some of the losses that they've had and get back on square footing, or if mortgage applications decline, right now there's insane demand. We've never been this busy. It's absolutely insane. But if demand declines, then you will see the banks start to compete again for business, and they will lower rates because they have the room to do so. They're not doing it yet because they're also busy. They don't have to. So there is room for rates to go down a little bit, not a lot. There is room for rates to go much higher, though, of course. And that is what we are all hoping does not happen, because the Fed is there with a steady hand, like a surgeon, just massaging those interest rates. Thank you, Mr. Fed. So as long as they keep doing that, we're going to be okay. I'm going to talk about this a little bit more when we get to real estate here in just a second. But I do want to show you a couple things because this is very, very concerning to me. We'll talk about the stock market for a brief moment. We saw this is Friday, so we're down 2.5%. Kind of an ugly day. Kept making lower lows, right? Just kept making lower low, lower low, lower low, lower low, and then tried to make this turnaround at the end of the day, which normally happens, but just couldn't. And in fact, ended up making another lower low. Now, I meant to, and I forgot to do something here in my prep. I meant to pull the futures up to see exactly where things were this evening. So I'm going to do that now on the fly. Sorry about that. So the futures right now are down 200 and some points. I expect us to have another down day on Monday. This brings me to one of my major points today, which has to do with this atrocious activity that has taken place that somehow this man is getting away with. Bill Ackman, if you have not seen him, he is a monstrous hedge fund manager, runs one of the biggest funds, maybe the biggest fund. I'm not sure. It's an enormous fund, mostly for rich people. He is not running a fund for a teacher's retirement. He is running a fund for people who are rich, who want to get richer. And he pulled off recently what is being called the single best trade of all time, which netted him over $2.6 billion in profit. Now, his fund. If we go and we look at what actually took place here, we can tell that for sure, 100%, there is market manipulation involved, and that there is no way that anyone can be this lucky. So we look at where, and this came right from MarketWatch. They have all the data on this. You can look it up. This is when he put the hedge on. So his fund is mostly long, right? Meaning that they own stocks. So he puts a hedge on. They're calling it a hedge because he's shorting the market. Now it's a leveraged hedge. He put in $26 billion, okay? So this is a $26 billion hedge. Now you can imagine $26 billion is a lot of money. To put into a leveraged hedge, if you go and you buy puts or something like that where you can make money if the market goes down, the cost is really small. I don't even know how there could have been 26 billion in puts for sale. I do not know how he accomplished this. I do not know what vehicle he used to do this, but that is such a huge amount. It's hard to fathom how big that is. It's so much that there is no way he could have done that big of a move without moving the market itself, which he probably did. He's probably responsible for the first leg of this move. But that said, everybody knows it's happening. There's no way to hide that much money. It's like turning the Titanic. But here's what's crazy. He turned the Titanic on a dime. Look when he got out. He got out and turned around with his position right here. Made 100x. Okay, so he made 100 bagger. 100 times his money. He put in, sorry, it wasn't 26 billion. It was 26 million. Sorry about that. So 26 million he puts in, okay, and makes 2.6 billion. Sorry about that. That's my bad. I'm getting excited. Makes 2.6 billion. So he puts in 26 million, makes 2.6 billion. That's 100 times the return. Now, how in the world do you make 100 times the return if you don't know exactly what's happening? If you don't know exactly when to do it? Because you would have had to start getting out of this position before the turn. He would have had to start getting out here. He couldn't have started getting out here. There's no way. It's too much money. It's too big of a position to get in and get out of. Now me, if I'm selling 100 shares of stock, if I'm shorting 100 shares of stock right here and I'm buying it back right here, no one's even going to see me. I'm going to get eaten up by the market. But if I'm spending this much money, if I'm exiting for 2.6 billion on the buy side, 2.6 billion, there's no way that I can turn the Titanic so perfectly. So he exited the exact last second of the top and then turned it around right at the bottom. So, and now he's been going on podcasts. He's been bragging about this. He's been telling people the story. Oh yeah, we were just in the room and said, hey, why don't we throw on this huge hedge? Bullshit. So bottom line is the market's being manipulated in a major way. Now, if you've been wondering how has the stock market gone up, even though it had the best month ever in 33 years, the best month in 33 years in April, it's because this guy is on the long side of the trade. He's betting and has his money bet on stocks going higher. So as a result, you've seen stocks continue to go up and continue to go up and continue to go up. So this is scary to me, because when an individual or a fund or a group of people realize that they have enough money to push the stock market around, it's a very scary situation to be in. Now the Fed has already emptied the magazine on this. They have brought rates down to zero. They have made liquidity available. They have done everything they can to help stocks go higher. But if there are people out there like this who decide they want to move the market around and then do it, we've got a situation where it's out of our hands, and that is not a good place to be. This is not a good place to be. This is not a good sign. This is not the best trade of all time. This is not a guy who got lucky. This is a guy who runs a multi-billion-dollar hedge fund, and he knew what was happening. How did he know? How did he know? How did he pull this all off? Did he orchestrate it? Is he in cahoots with people who orchestrated? Did he get fed information on when it was being orchestrated? I don't know. I don't know the answer to any of that, but I know that he clearly, as part of this market manipulation, that's taking place, and I expect these people to all have their day in court one day. So here's the things we need to think about. Okay, we need to get dialed in right here. The things we need to be thinking about with regard to the economy. Right now, the poll that was most recently done says that 2/3 of Americans are uncomfortable with returning to their workplace. 66%. This was done, not a ton of people were asked about this, but this is the main concern. I don't know if that number is totally accurate across the country, but it definitely does matter, because how long is it going to take before people feel comfortable? Are people going to wait till the CDC says, green light, you're all good to go, feel free to walk around and go to a baseball game without a mask on? Because that day is a long ways away. I can promise you that. The CDC has no interest. They make so much more money. They get so much more attention. They get so much more of everything that they want, the CDC, the longer this goes on. The conflict of interest here is through the roof. They're not going to say that for a very long time. So I just want you to know that if that's what you're waiting for, don't wait for that. Don't wait for that. Use your common sense. Use your instinct. Let your gut tell you what's right, what you should do. There's no sense in being stupid about anything, but there's no sense in being stupid about anything. So let's all take a breath. Let's sit back here. Let's realize that we're not in grave danger. We've definitely been lied to. Okay, is coronavirus real? 100%. Is it something that is floating in the air right outside your door? You shouldn't step outside for it? No. So we've got to get back in the game. We need to get back to get dialed in. We need to get the country moving again. We need to start participating in the economy again. We need to go back to work. We need to do all these things, and we need to do it soon, because we are what makes this engine run. And if we're the gas, and if we aren't there, the engine ain't running. And that's what's been happening. And we're getting to the point where we need to start taking a look at this on a micro level and start participating in the economy. Very, very important. All right. So that was that one. And then I don't know if I can get to this last slide or not. I tried a bunch of different ways. Let's see if it works. There we go. So colleges are having major, major financial woes right now. Tremendous amounts, billions of dollars. It's really bad. Let's just put it that way. It's really bad, because colleges can't exist in this scenario. Now there's online schools that are just fine, but and the online portion for some schools is a bigger chunk of the revenue than others. But a lot of the ones that were not online, but this is particularly hitting the historically black colleges and universities, the HBCUs. So we're seeing that a lot of issues with that. There's going to be a lot of issues with a bunch of different types of businesses if people are not ready to get up, get out, and get going. I do want to speak on real estate as well, because I don't have any slides for real estate. I don't. I just want to speak on a couple of things, because people have been asking me over and over and over for the past 60 days or so, when do you think the real estate market will crash? Do you think there will be a downturn? Do you think there will be a correction? Do you think there will be an opportunity? And I think what we've got to look at right now is the real estate market, which it's been microsizing itself for quite some time now. If we think about it, the last 4 or 5 years, it's become very micro market oriented, very small market oriented, to where this particular neighborhood could have a totally different market than the neighborhood that's just adjacent to it, because there's a road that splits them, and that road means everything. And on this side it's going great, and on that side it's not. Or maybe it's super hot here and it's warm there. Micro markets are what's happening to real estate. Also, price ranges are going to be micro marketed. The under $500,000 detached, 3-bedroom, 2-bath market, which can be in lots of different geographies, is going to be a subset that needs to be looked at. If you look at a certain neighborhood, if you look at a certain zip code, things are going to be very micro-oriented. We're going to see certain areas doing extremely well. We're going to see some areas maybe not do as well. There's going to be a big dichotomy between this. And the overall market will still have its averages. Those averages aren't going to move as much, I don't think. I don't think you're going to see median prices drop or rise a whole lot. But you're going to see some areas where the median price rises a lot and some areas where it doesn't. And that's going to be based upon what's taking place in those particular areas. So I think we're looking at a hyper-local focus when it comes to real estate. The broader market, there's still a tremendous amount of activity. I was busy all day today. I was answering questions, running numbers, taking applications today. Lots of stuff going on, and I'm just one little guy here, in the mortgage business. So there's a lot going on, a lot of demand, a lot of people still want to buy. So what would cause this? And this is the best question I've got recently. What could cause real estate market to crash? What could cause prices to go much lower? It's very simple. Either we'd have to have buyers go away, or we have to have a whole bunch of sellers come to the table. That's really what it boils down to. Right now, we still have more buyers than sellers. There's just more buyers than sellers. That's the bottom line. And with a low interest rate environment, that helps. So if interest rates went higher, which seems very unlikely right now, because remember the Fed and their steady hand? The Fed has that steady surge in hand right now. Look at that, not a shake, nothing. They've got the steady hand, and they're just chopping away every day, buying, mortgage bonds, keeping mortgage bond prices high, keeping profits, there and available to mortgage companies who've been hit really hard by forbearance and many other things. They've got the steady hand, they're keeping it there. I don't think rates can really go higher unless companies as a whole decide that, we have so much demand, let's keep cranking rates up, who cares? That's the only thing that causes rates to go higher. So I don't think we see higher rates. Do rates go lower? Maybe a tad, probably not much. I think rates are going to stay right here. So if we don't see rates move, then the only thing that could happen is that buyers decide they don't care about historically low rates, and they decide to just sit on the sidelines. I think things would have to be really, really ugly in order for that to happen. I think it would have to be really, really ugly. I think you'd have to have people dropping dead in the grocery store from coronavirus, or something massive would have to happen in order for buyers to take a pause like that. Because right now I see buyers getting into the game. Most of the people I talk to are first-time buyers. Most of them, I'd say 2/3. These people are getting into the game right now, not getting on the sidelines. There are some people who've said, I want to wait a couple months, or I want to wait till the end of the summer for this reason or that reason. Okay. But these are people who are making plans to move, making plans to buy. So what would cause inventory? This is the only thing. If we break this down step by step, the only thing that could cause real estate values to go down would be a massive influx of inventory. Where is that going to come from? Because we've been begging for this for a long time. We have so many more buyers than sellers right now that most buyers that I work with, I focus on VA home buyers, but for these veteran home buyers who are in competition out there every single time, very rarely are they getting their first offer accepted. Very rarely. It's happened a few times. I've known the listing agent or something like that, and we've been able to make something happen. But most of the times they have to write offers on multiple properties. So we've been begging for more inventory. We've been begging for more homes. So how much would be too much? I don't know. I do think we are going to see some inventory increase once we get on the other side of this thing. Once open houses become okay for real estate agents to do again, which I hope will be soon. Once we can do open houses, Car says it's cool, Nar says it's cool, everybody's cool with it. Once open houses can happen again, we're going to see what inventory is out there. We're going to see some people who've been holding back, putting their homes in the market. They're going to come to market. And that's going to be the first test of the buyers to see where we're at. I think that it's going to be welcome with open arms. I think a lot of buyers are going to be super stoked. I think they're going to be able to get into a situation where they're not competing with as many buyers. Maybe they'll be competing with 2 or 3 instead of 20 or 30. And that'll be a really good thing for a lot of buyers. I just don't think that there's going to be enough inventory to hit the market, to flood it to the point where, we have sellers sitting there going, I haven't got an offer. I don't know what to do. I just don't think we'll see that. Not in my world, I should emphasize, in the 750,000 and below range. We are starting to see in the higher price points things slow down a little bit, and that makes sense. A lot of times in the higher price points, people have more options. They have more options. They're already a homeowner. They can decide not to sell their other home. They're not renting right now and on a timeline. There's certain things, there that they're afforded because of maybe the financial situation that they're in, where they can be patient if they want to. They can wait to do things if they feel like it. And they may decide to do that right now because of some of the uncertainty. There's also some issues with the people who are higher income wage earners who may be owning lots of businesses, and those businesses might not be doing so great right now because of the economic shutdown. Remember, that's a trickle-up situation. If someone's a restaurateur, think about some of the people, I can't remember the guy's name, who owns all the really hip restaurants in San Diego. There's a bunch of them downtown. They're kind of all over the place, and every time he opens one, they're like, oh, this dude opened another restaurant. You guys probably know his name. But like that guy, for example, getting murdered right now. Murdered financially right now. Everything's shut down. My wife was asking me today, the shutdown's over, right? Yeah, technically it is. Yep, the beaches are opening tomorrow. She said, well, why aren't these restaurants open? Why don't they get open so they can start making money? Well, that's a tough call. Because remember, being shut down, it costs you money every day. To not be open, being closed costs you money every day. But it doesn't cost you as much as being open. Being open costs you more money. You need people to come in. You need enough people to come in to cover the difference between what it costs to be closed and what it costs to be open. And right now, I think most restaurants believe that they cannot cover that delta because people just aren't getting out. When is it okay to bring your kids out? I've been making trips to the grocery store as if it's The Walking Dead. We're going in masks. I'm going there, I'm covering myself in sanitizer before I go in. When I come out, it's like the apocalypse when I'm going to the grocery store. So when do you start bringing your kids to Chuck E. Cheese again? These are the questions that need to be answered, and these are the things that are going to determine how long this goes on and how many people are affected by it. But there are a lot of high-income wage earners who are self-employed business owners and entrepreneurs who have businesses that count on people coming into their business in order for them to make money and employ people. And right now, all anyone seems to be talking about is the people who are filing for unemployment benefits. Well, here's the thing. People filing for unemployment benefits are still getting money every week. These particular business owners are not getting unemployment benefits, most likely. Okay? Now, they may be employees of their own corporations, and maybe there's a way for them to file and get something, but for someone who may have a big cost structure, big leases, things like that, that's the reason, that was the purpose of the small business loans, the PPP and all that stuff. I don't know how well that's going. I don't know anyone who's gotten the PPP money yet. Do you? Does anyone know anyone who's got the PPP money yet? I hope it's been getting out there, but I just don't know if things have been funded yet. It's hard. It takes time to fund stuff like that. Even when the government's giving money away, they still want lots of paperwork. It still takes time. There's a huge influx. Where was the infrastructure to execute the PPP? They went through the banks. The banks are busy as heck right now. I don't know. I don't know when that comes out, but I know this. We need to get back to work. We need businesses to open up. We need people to go into those businesses and to buy stuff from those business owners. This is super important. Super important because there's a trickle-up effect, and it trickles up first, just like it's doing right now, and then it's going to trickle down. And you can count on that happening. So what does that mean? Does that mean higher prices? Does that mean less hours? Does that mean additional fees for different things. I don't know. I don't know what it looks like. I just know that if you're a business owner and you own a bunch of, what are those places called? The trampoline parks or something like that, you're screwed. You own if you own a McDonald's, you're good to go, right? Because McDonald's drive-through, they're just, I mean, the drive-through, Chick-fil-A, has anyone been to Chick-fil-A? I don't eat Chick-fil-A because they don't have anything vegan for me, but my daughter and my wife love it. And every time we drive by it, we look at the line, and it's been crazy. So some businesses have thrived in this particular circumstance, while others have been crushed. And so it's that dichotomy that we've got to sort out here. What happens with the ones that haven't done well? How do they rebound? Do they reinvent themselves? Or is it just a slow death by 1,000 days in a row of being unopened? I don't know. We've got to find that out. But it's time to get dialed in. It's time to get our head on straight. We need to take a look at our investments. We need to know what we've got here. We need to not panic about anything. We need to look at our real estate holdings as well. And we need to say, does it make sense? For what it is, the way we have set up. Is our long-term plan still in place? Cool. Got a long-term plan? You're good to go. If you don't have one, make one now. Now's the time to make one. If you're a buyer who has been waiting for an opportunity, for some uncertainty in the marketplace, where you might be able to get a little bit better deal than you would have been able to before, this could very well be it. This could very well be it. But sellers are still ruling the roost in my world, and that mostly under 600,000 is where I'm at, but this definitely under 750 for the vast majority of the people I work with, who are first-time buyers, who are veterans, who are active duty members, mostly VA-oriented transactions. So I just want to make sure you know what world I'm in. Not all worlds, but what I'm seeing, the sellers are still ruling the roost. They really are. I have a property in escrow right now that's in Fallbrook, and sellers really dictating terms there. So it's still like that for the most part, but it's not as bad as it once was, which is encouraging for buyers. We just have a lot of things going on. There's a lot of people who are saying a lot of things. There's a lot of posts going out there saying here's these rules and those rules. One thing I did forget to mention with forbearance is that it can cause you the inability to refinance, because certain programs like Fannie Mae, they're going to want to see your mortgage history, that you've made your last 12 mortgage payments. Well, if you haven't, it doesn't matter why you haven't. That you're going to be ineligible for refinance. Now, with a VA loan, for example, sorry, this is like 30 minutes later. With a VA loan, for example, you're eligible for refinance if you've been through forbearance, as long as you weren't late on the mortgage prior to the forbearance. I was able to confirm that today, and I'm going to get more information on that and provide it this week, okay? Because different people are asking about it. It's something that I want to learn about. We're in uncharted waters here, kind of across the board. This is why I said let's talk about patience. Let's be patient with people. Let's be patient with businesses. Let's be patient with our business partners. We're going to need to show some grace. We need to understand things are a little bit crazy, kind of across the board right now. But let's stick together. Let's be smart about stuff. Let's work together as an industry to make things happen. Let's continue to crush for our clients. Let's continue to put them first. Let's continue to wow them with amazing service, with over-the-top information and education about the decisions that they're making. And we can continue to win now, in the market to come, and in the future as well. All right, I'm going to get off my soapbox. Thank you guys for tuning in. Sorry I didn't get to look at comments or anything like that. Say what's up to some people. Hope everybody is having a great Sunday night. If you think this is valuable, feel free to share it with your friends. If you know a veteran who wants to buy or refinance a home, I would love to serve them as they have served us all. That's it for me tonight. I will see you all.